But they keep checking that. They know we're real estate agents.
I feel tough. They talk about, yeah. It's just a bit. As you're walking the house, you're looking pretty good. Where can you? That's funny.
Oh, I'm just not.
Are you like living guys or what? Apex with the Kings. Apex for a bit.
How is everybody today?
Fantastic. How are you, Sean?
So good. So good. We're gonna get today rolling. There a clicker somewhere?
Oh, I did have
Right
it.
here.
It's floating around.
Let's make it click. Let's do it. I don't know. We even had a. Let's go. Wants and needs. I need a scribe. Who wants to write for us since my handwriting is horrible? Oh, thank you for doing this for us. Okay. Sorry, did we already?
That's-
Well, bucket fills is first. Let's get that. Okay, let's do, while she's getting ready to write, let's do our bucket fills real quick.
Sorry.
Don't make me call on you.
We got like 4 newbies in here, so thanks for coming. Got Phoenix, Isaiah, that's 5 actually, Brian, Julie, and I'm so sorry for your name. Jose. So say hi to all of these guys.
Welcome, welcome.
I had to move up too, you have to. Come on in.
Yeah, no back rows. No back rows.
Only look me, jump on it.
And then these two are gonna walk to the back row. So, I want to fill Lauren's bucket. This onboarding has been, it's been difficult. Onboarding and offboarding of Logan has been what I would call difficult or a challenge. We're doing the old school paper change cards. Who remembers those? Yeah, only 2 of us, because we haven't used them in like 122 years or something. Yeah, Realms is no longer in existence. Well, I take that back. It's there. It's just not being utilized on the backside of it.
Yeah, you had to like walk up to your broker and be like, hey, will you sign this? And you're like, what the shit is this?
Yeah, exactly. Or just send it to me via DocuSign and I click through it and sign it. Because how often do I sign stuff? All the time. So anyway, yeah, so it's been a little bit of a challenge. So I'd like to fill your bucket. And then who else wants to go? I was gonna say something, but I think there's a
I've got
slide.
one. Can you guys hear me?
Probably a slide.
I'll fill Tim's bucket since he's
There's
not
not.
here and his head can't get bigger.
Okay. Will you go,
Is Tim
will you go
online?
grab that for me? If you don't mind.
Tim is flying.
And then Bradley, will you go grab Chris?
Tim is gonna start coaching me on the 411 stuff. And does it for free if anybody else wants to do it. He will extend that. I'm not special.
You guys know when they say 411, you also sometimes hear GPS, right? Those are the same things.
But
What's your GPS on your phone or in your car do?
tells you where to go.
Tells you where to go. What does your 411 do? Where to turn, what to do, what not to do.
Just kind of like a sounding board and stuff, and I just really appreciate his time and friendship and stuff. So, anybody asked, I didn't really say anything to him, so just like keep it
It's not being recorded.
Yeah.
I already texted him.
I wanna fill Chris's bucket. He's, even though when he's not here, he's always working, like even this weekend, we were texting back and forth, which is not an uncommon thing. You guys might think so, because he doesn't like to talk to you guys during the weekend. But occasionally I get to, but this past weekend was his birthday. So I wanna fill his bucket and let's sing happy birthday to him. So, and we made him wait, cause he was like, I think I gotta go.
Doesn't he have to come up front?
Yeah, he's got.
That was just a play to get you to stay.
Actually, I do need to talk to you, but.
Oh.
So, I want you to come up here and sit in the hot seat. We'll even let you sit on the bar stool or, stool. A stool.
So I've been sung to twice already, but we need to step up the game, I think.
Is our singing that's horrible?
Yeah, the first one was on Zoom, it was pretty rough.
That was your.
Never been sung to over Zoom, it's pretty bad. It's not good.
Birthday boy.
Not good.
That's like challenge accepted for next year. If you
He
want
was
to up your game.
43, 37, something like that. I don't know. Hey, have a seat, birthday boy. Let's sing. All right, let's, it's really well, because I'm not a good singer and I'm horrible. So let's go. Happy birthday to you.
That was way better than the other.
I just wanna tell you guys how appreciative I am of him. It's, when you have someone that does the books, right, that is, in my opinion, the worst thing for me. That's like my nemesis is the books, and he just keeps them clean and good, and every time we ask about a certain thing, he's like, hold on, let me pull it up, and he's got it right then and there, so it's awesome. So we appreciate you. I know you hates being put on the spot. Okay, any other bucket fills?
I wanted to thank Marcus and Corey and everybody who went to the situational awareness class. Ashley and I had so much fun wrestling and yeah, I know, like we don't have personal.
I heard a ton of good things about it. Yeah, it's awesome.
Wade wants to bill Tommy's bucket, he's able to get him a much better rate and a monthly payment for a builder. New construction, and they did it with concessions and $5,000 less in concessions.
Yeah, Tommy's been awesome. He's doing a loan for myself, and it's been a nice little, I don't know, a smooth situation. Let's put it that way. So,
Can you guys hear me?
Chris?
I want to fill Lauren's bucket today. So some of you may know, I don't know, not really, but Realms has gone down, which you guys might be familiar with Realms, which is how we associate with different brokerages. And coincidentally, we're adding and removing a massive number of agents this month. And so it is with a lot of extra effort that Lauren's making that work. So thanks, Lauren, for all you're doing.
You guys already heard that once before, right? I wait till you guys.
I want to fill a bucket for Lauren and Bradley, for helping me with the match, so thank you for all that you guys have done.
Awesome. Anyone else? Okay, wants, doesn't work. Wants and needs is our next slide. Who's got something that they want or need?
I want more transactions.
Oh, that's awesome. Raise your hand if you want more transactions. Yeah, who doesn't, right? Yeah. Okay, what else? Trevor, what do you have coming up?
A lot. You need a remodeled place in Weaver Davis, we probably have it, so. We've got 6 or 7 that our guys are currently working on, and 3 or 4 others that should be up here next week or so, but quite a few.
We have any rental available.
Oh, yeah. So we have a rental in Layton, 4-bed, 2-bath, like. What, over behind?
Will you guys shoot me that info on that rental?
Yeah.
I actually have a rental coming up available as well. Mine is a 2-bed, 1-bath. It's in South Ogden. It's a little duplex. I'm not sure of the rent amount yet. It's gonna be around, I don't know, 15, 16, 1700, something like that.
How much is your Layton rental?
And then I have a townhome. I can't remember the complex. Is the Woodside Townhome Salt Point? Does that sound right? West Haven,
Oh, West Haven?
in West Haven, down 4,000, right below Midland. I think it's called Salt Point. This one originally, the guy paid like close to 5 for it, so it's got like every bell and whistle in that complex. It's gonna be on the market probably this next week. I'm not even sure of the beds and baths yet, to be honest with you. And then I got another one. In Clinton, it's a house, 3-car garage. It's probably gonna be the cheapest 3-car garage in Davis County, well, in Clinton. And it's got 5 beds, 3 baths, maybe 3.5 baths.
How
Or
much-
sell or rent on that?
That one's gonna be for sale. Those last 2 are gonna be for sale. Yeah, sorry.
I have a rental coming up in Washington for us to go on back. 1300.
I wonder how long many of these rentals are gonna be available, just considering the tires. I feel like we probably have a lot of people coming. Move this way.
I don't, 13, I think you're right.
Since we're on the rental page, I have Washington Terrace, 3-bedroom, 1-bathroom.
Will you shoot me that info too?
Yeah.
Someone referred me a tenant, a future tenant, and I don't know the tenant, but I know the guy that referred me. He speaks highly of this person. But mine, I don't think is big enough.
17.
So while we're on the rental. We've got another one in Ogden, 3-bed, 1-bath, or 2-bath, I think. It's getting remodeled right now. It'll be ready in about 3 weeks. Gonna need about $1,900 for that one. But the landlord's in the room. How are you guys doing on your leases? Have you guys noticed any? Are you having to go down at all?
Yeah, like
Your
the
leases
ones,
to get
my
built?
1-bedrooms or my 1-bathrooms, I'm getting murdered on. But the houses have been more consistent.
I had a recent conversation with, I don't have the notes in front of me, but with Ogden Housing. And they gave me their, because Ogden Housing is not necessarily Ogden City, it's just Weaver County more or less. But they gave me the allowance amounts for the different size units in the different areas. And it's actually gone up. It's insane. So yeah, I think certain units are going up in price per month and certain ones are going down, depending on the size.
Speaking of rentals, I'm putting it out there. A friend that needs a rental, 3 beds, 2-bath in June. Good friend, good renter. Steph, what's your listing in Syracuse?
Oh, let's talk about a few of them. So we've got.
I know you have the.
Well, you missed the rental parts. You can't talk about
Yeah,
rental.
no rentals.
Okay, so we have one in Syracuse. It went from 640 down to 650 yesterday. Huge price improvement. That's 4 bedrooms, 3,300 square feet, I think. And 2-car garage. Yeah, so cute, very open floor plan. Then the next one, yeah, super cute. And the next one's in Roy. That one comes up tomorrow. Oh, excuse me, Thursday. That one's 4 bedrooms and 450. 2 baths, 2-car garage, multi-level. We've got one in West Haven that just is coming live tomorrow. That's a townhouse for 405. That one's pretty much brand new. They lived in it for just under 2 years. Yeah, that's actually my son's house, so it's adorable.
It's not super cute.
It's
though.
adorable and super cute. And then we have another one in almost North Ogden. It's Ogden, but it's up on the East Bench. And that one's 440, 2-car garage, multi-level, 4 bedroom, 2 baths. So. Woo-hoo.
Awesome, nice job.
That
work.
that last one, is that like coming or is it already?
It just barely went active this morning. So,
Anyone else?
sorry, I was late too.
My name is Phoenix. I might be a familiar face for some of you. I've been with Keller for a few years.
I think I've seen you in both.
Yes,
Yep.
yeah. I've been in hibernation the last couple of years, or like at least a year and a half, and now I'm getting back into real estate because I finally have clients that are calling. Too. So I have a couple listings coming up, but on that, I don't have any photographers, sign installers, recommendations of who you guys use. It's like transaction coordinators. Stuff. Sure,
Definitely help you.
So whoever you use.
We got this.
Yeah, we can definitely help you. Anyone else?
I need a house in West Davis County that has an ADU. And like he really wants a 4-car garage. Under like 650, 700.
Mark, we just did open house for one for Martian.
It's not a current ADU, but it's got up and down. And with a separate entrance for the basement.
Cool.
It's not plumbed for, it's plumbed for a kitchen, but not built out.
All right, thanks.
Okay, awesome. Going once, going twice. Okay, gone. All right. Okay, so this is what we have coming on, or coming up this week. We have grabbing attention with your business. That's today. Wednesday, we have the housing forecast. So this happened live, last week during the,
Coaching call with Mark Willis.
yeah, the Mark Willis call. So we're gonna live stream it. We got that from the board. And then on Thursday, we have Command, which we're gonna work on referrals, which, have you guys seen the referral part of Command? Raise your hand if you've seen it
Well, recently or?
at all. What's the coolest part about it? The map, showing where people are coming and or going, right? How awesome is that? Now, did you know with Command, I'm probably speaking to the choir, right? Because you guys are here. You can, so, Lauren, help me with this. I have this listing up in Mountain Green. We were looking at the map and there was all these areas within, I'm gonna call it the areas of Phoenix, that were constantly coming here and then constantly looking at our stuff. So we did ads, targeted them in that area. How cool is that? Like, you can use that map instead of just looking at it, you can use it for your business. So go to that class, that's Thursday. And Friday, this is my super favorite class that I teach, which is contracts. Probably the most boring class, right? For those that have been, but it's super useful. And then reach out to Allison today. Do you guys know what today is? It's a year ago. Yeah, so reach out and tell her you're thinking about her.
Well, all of you know contracts and all of you know DocuSign bits and pieces. However, I've touched base with some of you agents that have been using this forever. But there might be something that we could do that would save you mass amount of times. So come to that, even if you do work in this day in and day out, you may actually find something that can save you time. And if we want more transactions, we need to save ourselves some time, so.
Okay.
Add to that.
Awesome.
Okay.
And then the office, the staff will not be here, but the office is not closed. The office is what? Open 24 hours a day, 7 days a week. Does everyone have their Kissy app to open the door?
I
Okay.
think we should do a section of getting that updated for everybody.
Let's go talk to Chris.
Come chat with me.
It's
I'm just
actually,
saying, if
it's
I-
pretty
I'm
simple to
kind of
get set up. It only takes a few minutes, but
Yeah, if you're missing it, let me know.
yeah, if you don't have it, grab one of our staff people and they'll help you get, no, don't grab me, because I won't, no. But it's super helpful. And you can actually open the door from anywhere. Well, I can't say anywhere. Anywhere you have service, you can open the door for somebody else if you need to. Like, that's how cool it is. Okay, conversation. So Dalton, do you want to give us
Yeah,
I think
next,
you need to stand up.
okay, next week, Tuesday. Cause there's a little bit of like, who's actually gonna show up on Monday? 'Cause it's a federal holiday, so we decided to go with Tuesday. We're starting officially. I'm gonna run 2 classes. One for folks that have never done it or want to get back into it, and that's just an open invite. We're gonna rotate 4 weeks worth of content just over and over and over again. It is 5 days a week. Starts at 8:59 a.m. Those of you that don't know me, that's when it will actually start. And then I also run an advanced class. This will be the 3rd time we go through it. I've made some tweaks. And it's a 16-week
rotators, so I will get through 3 of them this year. So I think, oh yeah, giant QR code, you can sign up there. Get on the calendar invite for the beginners class, and then if you want to talk with me about the advanced one, like, yeah, the more the merrier. I want to make spots for everybody, but it's just not a beginner's course.
Yeah, so this is to help you get, and thank you so much for hosting this,
Yeah.
heading it up, spending your time doing it. But this is to get you comfortable with our dialogue, the things we say on a regular basis, right? A script sounds like a script if you don't practice it, right? The idea behind a script is to not sound like you're scripted. But you know what to say and when to say it. Dalton's gonna help you get you there. Okay, questions on that? Hearing none, we'll move on. Okay, so this is a Tony Robbins, not Tony, he's not gonna come here. But this is gonna be Jessica, I don't know how to say her last name correctly, it's Matley, am I saying it right? She's one of the people who drive people to the Tony Robbins event, but they register here. I think was this 2 hours?
It's gonna be an hour.
An hour course with her, and it's free. So register to listen to her. Basically, it's gonna again give you like a heightened preview to get you wanting to go to Tony Robbins. So we've had these people probably regularly for the last few years. So I don't know if we've ever had her before though.
One thing about it is we'll have it playing here during our team meeting, but if you're not gonna be here, you'll have to register on your own. We cannot Zoom you in.
So this is Marcus's class. So to unlock your best year ever. This is, I don't know if you can read it, and I was thinking there was a QR code on this one too, but there's not.
You don't just have this one.
Okay, so mark your calendar for that date, which is actually already on our calendars, but you'll have that one. Bites and insights. So who's good at social media? No one dare raises their hand, but Bradley. I am absolutely horrible at it, but this is gonna be a mastermind. I know we have some agents here that are much better at it than myself.
We've got 3 awesome panelists that will be asking questions too and kind of masterminding around what they say. But it'll be a good time. There'll be food. Some good content will be provided.
Yeah, you're gonna get bites and insights. So who's our panelist?
Alex Moore, Jen Simpson, and Kaylee Miller.
Awesome. All good at it. So, okay. There's a QR code to sign up. And Leadership Unlocked, this is another Marcus Green thing. This is 4 weeks. It's on Thursdays. And I believe didn't this have limited seating? Did someone say there was limited? I can't remember. I was thinking he was only doing it for so many people. Anyway, this is a pretty big deal. Marcus has worked hard to put this together. So you can see what it says. Get signed up. If you have questions, let us know. And then Ignite, we have a handful of people getting ready to start teaching Ignite. Who teaches Ignite? Yep, it's our peers. It's the people in this room. It's other people who are well-versed in the industry, right? So you can go to Ignite 100 times, and if it's a different instructor, you're gonna get different stories, different real life situations and scenarios. So please join us for that. It's getting ready to start.
I'd just like to say, you don't have to go to Ignite even if or you should consider Ignite if you're experienced as well. You just don't have to go to every class. Look at which ones you need help with and go in there to refine like a certain skill.
Yeah, and you notice I'm going through all this stuff super fast because I'm leaving time for these guys. Okay, so don't confuse this. When I first looked at the slides yesterday, I thought bold, but it's not bold. This is the 10 bold truths that is going to be taught in at Family Reunion, which the ticket prices increase. What is today, the 15th? So that 14th. So they increase what, Friday? Is that what the 17th is? Who's going to Family Reunion? I know some of you want to go, but you can't go. If you want to go, this next one is also about family reunions. Or did you want that QR code? Want me to go back? Got it. Anyone else need the QR code? Okay. Okay. So someone threw out the idea. So this is our awards gala that we a lot of times do it here in Utah, but the last year and this year we're doing it in at family reunion at this, I can't remember the name of the foundation room, which is a pretty cool place, limited to 300 people. And
That's Justin.
yep, Justin's been there. He's been in the VIP section of it. That's how cool Justin is. You know, I got kicked out several times.
I
It is
was
what it is.
there, it was like
Not lying.
awesome.
Not lying. Anyway, someone mentioned, because it's gonna be a masquerade ball, so someone mentioned, why don't we do all of KW's success attendees having the same masks? A version for the females and a version for the males. And how cool would that be? Because you guys may not know, but in the years past, when we go to family reunion or mega camp, we would always wear matching shirts as a region, right? We had all these different ones. We had bowling shirts, we had jazz shirts, we had all these different ones. And the last few times they did it, the shirts, whoever was heading it up got super cheesy, okay? Not that a bowling shirt wasn't cheesy, but they got even worse. And so they stopped doing it because people were like, I don't want to participate in this because it's dorky. But I think,
But everyone there comes dorky, right?
doing a success version of a mask would be pretty badass. Who agrees? All right. So we need to appoint someone to head this up. Because I know I'm not a creative person. So who wants to help me head this up? Raise your hand.
I already ordered my mask to match my dress, so. I've already ordered my mask.
You're coming down just for the, like, a small part of it, yeah.
So that's why you had to find out like.
Okay, so if everyone here says you're good with it, then we're gonna run with it. We're gonna figure out who can head this up, and we're gonna, I don't know much about creating masks, but I'm sure YouTube will tell us. But you said you already have one?
And someone's dressed.
Yeah, I was like, Rusty said we could all match her if we wanted to.
Okay, so will you get us a screenshot or a picture of yours, and we'll ask Rusty to do the same, and we'll see if we can do that.
I have one, though.
I don't know if anyone cares the color, do you? Okay,
Good luck to the designer of this.
yeah. Okay. Oops, did I go the wrong way?
Hey, thanks.
Okay, so, oh, we have that big check that's in Chris and Lauren's office. Profit shares is just massive. And I think, I'm really not surprised, or gonna be surprised. I should say, I'm not gonna be surprised when they start doing something for the California fires. I haven't seen anything personally yet, but I haven't been paying attention to my email. They're started going for it. We as a company have donated so much money. Us as an office have donated so much money. And a lot of times people will donate their profit share check, just automatically just say, donate this to KW Cares. But it's a big deal. Okay, you do all your calls in a TCPA way. You guys know what that is, right? Who doesn't know what that is? Okay, good.
I don't know what that is.
Everyone's looking down because they're like, I do. So
That means you have to go to the principal's office and talk about it.
this means do not call someone that's on the do not call. What happens if you call someone that's on the do not call?
It's sued.
You get in big trouble and you go to realtor jail. Actually, it's not even realtor jail. It's I don't even know what the government entity that goes over this. The World Trade Organization. I mean, who knows? I don't know who it is. Yeah, but I know that it's a hefty fine when you do it.
Good question.
That's the way.
In a wrong phone number. And you.
Yeah, see, sorry, I must have misdialed. I must have been given the wrong number. Have a good day.
Like I was texting and they were like, stop. And I was like, oh, this is my personal phone number. I'll take you off my list. Have a great day. And they were like, stop texting me. And I was like, I was telling you that I was taking you off my list and being nice. So,
Yeah.
but I was just wondering, like, they were like, I'm gonna report you. And I was like, okay, for being nice. But I was just wondering what the rules were with that.
Yeah, so you just apologize because that does happen.
Send the
Transfer those
headshot.
numbers regularly.
So,
yeah.
Please.
Yeah, if you're responding to someone who inquired, that's different. Cause there's a lot of people there's realtors out there that have their own phone number on the do not call list. Can you believe it? But then they go market to people to call them. Does that seem weird? So you gotta remember that some people don't wanna be talked to. Okay. You guys are up. This is you guys. Yeah, how long is your session? Like 4 hours?
Yeah.
Minimum.
Okay. You guys need the clicker?
Yes, if we can.
No bad.
What do we got, 30 minutes?
I have no idea what
An
it's gonna
hour.
do. An hour?
An hour?
You don't have.
You said that you taught the most boring class, DocuSigning contracts.
So hopefully yours is more entertaining.
I don't know. Okay, thank you. My name is Paul Olson. I'm excited to be here. I'm a CPA. Our offices are in Utah County, Pleasant Grove. I know that this is a successful office, high speed. Because before Justin shook my hand, he told me I better have my crap together and bring my A game.
I said something.
Something like
Something
that. It was
It was an A word. I just-
slightly harder than that, but I heard crap. Anyways, Justin, good to meet you. Okay, so I want to talk about, I can kind of be fluid with the conversation. We'll have some time for Q&A, but I really want to talk about the things that maybe is interesting to you guys from a tax perspective. Okay, ways that you can keep more money in your pocket. So if you've got a question in the middle of everything, throw your hand up. Let's talk about it. Okay, because you know what tax ramifications you're facing better than I do. And I can probably talk towards it. And if I can't, I'll let you know I can't. Okay, so what I'm gonna go through is basically a conversation that you should have with your CPA probably twice a year. And what this is I call it a comprehensive tax plan. If you are not meeting with your CPA at least once a year, maybe twice a year, to basically take your pulse. Hey, where are we at in terms of tax projections, transactions, deals, things that I can be doing to keep more money in my pocket? You either need to reach out to them and say, hey, I need more contact, or you need to find a better solution. Communication is difficult for CPA firms because there's not enough CPAs, right? I hear all the time, hey, my accountant won't call me back. Can I onboard with you guys, right? So if you need to, you guys be the ones reaching out and have that contact and that communication with your CPA. The reason that's important is this is true, give or take a few divorces potentially. But taxes will be your biggest expense here on this earth. So it's in your best interest to understand thoroughly how you can mitigate that as much as legally possible. And work with people that know that. I throw this up here because taxes are everywhere. If you bought a drink before you came over here, you already paid tax today. If you stopped and got gas, you already paid tax. There are so many different taxes. Oftentimes when a CPA comes in and talks to someone about tax, it's usually a conversation about income tax. How can I eliminate as much income tax as possible? But the reality is there's a sales tax where I live, 7.25%. I want to go buy something for $1, I'm going to pay 7.25 cents. Kind of crazy, right? Use tax, Medicare, Social Security, there's an alcohol tax, heavy highway vehicle use tax, transient room tax. Some of you guys probably know that if you're running Airbnbs or hotels. Property tax, excise tax, net investment income tax, and lastly, income tax. The truth is, the brutal truth is, we live in a society, I love the United States of America, support the government, but we live in a society where we really don't actually own anything because of tax. Try not paying tax on your home, and you'll find out very quickly who actually owns that home. You're essentially leasing that home, small lease payment. It's called tax, property tax. Don't pay it, you'll lose that home. So where we can strategize most often is this last piece right here, this income tax, because that is the biggest tax rate. I can't do anything for you for the sales tax that you paid for that monster before you, right? Or going out to lunch or anything. But where you can strategize is in income tax. So if you're getting screwed everywhere up here, at least be wise enough to know, hey, there is something I can do from an income tax perspective. And that's kind of what we'll talk about here today. Okay. This is a table for 2024 of the different tax rates. And it's a little bit crazy. Here's the example that I like to use. Say you're married filing jointly and you make somewhere maybe $300,000 a year, okay? Your tax rate is 32%. That's just federal, not state. That's just federal. If you make that much money in the United States of America, you're working a third of the year on behalf of the government. For some people, California, I mean, bless California, they need all the blessings they can get right now, right? Their tax rates with federal and state are over 50%. They're into July before they're even putting money in their pocket. And this is not, I mean, these are the real tax tables. It's crazy, right? So even for us, Utah's typically about 5% state tax rate. But if you're making 300 grand a year, you're looking at 32% plus 5%, 37. Okay, well, you just worked almost half the year on behalf of the government just to live here and breathe, right? So do your best to understand what's available to you to bring that down as much as
At least
possible.
we know we're getting our money's worth.
At least you know you're getting your money's worth. There's a lot of people that would agree with you, but
Money.
No, certainly.
yeah. Good point, good point. Okay. Before we jump into tax, I'll just do a quick little plug. The foundation of every tax strategy is your accounting, your bookkeeping. Hopefully, you guys have some sort of system set up for how you're tracking your income and your expenses. If you don't even need to be in a tax strategy class. You need to be like back one class in like basic living United States of America finance class, right? I run into way too many entrepreneurs, real estate agents that don't have their crap together, right? And it's very easy to kind of lose track of that. Like, hey, I'm a whale of an agent and I can make it rain. I'm a money maker. I'm not a money organizer. And unless you partner with someone that is a money organizer, your tax strategy and everything else that goes with it is out the window because no one knows what you're even planning for, right? You can't even be aggressive with something when you don't know what reality is. So I would strongly recommend, whether that is Excel and you're just doing it yourself on a monthly basis, bookkeeping in like QuickBooks, or you can use a software, or you're going as far as hiring a firm like ours. There's lots of firms that'll do bookkeeping. That is a critical piece of keeping as much money in your pocket, as painful as it is to pay for that. I promise you that when you do know what reality is, you can actually plan around those things. So keep track of your income, keep track of your expenses. Don't write them on the back of the napkin. Okay, the first piece here, I believe, correct me if I'm wrong, I guess this is a question. Is everyone here paid 1099? I guess there's some office staff that are W-2, but the majority of the agents is 1099, right? Okay. So 1099, that's the greatest way to go. Let me teach you, a lot of you probably know this, but if you are making over, I would probably say, I tell most of my clients $40,000 a year, and you do not have an LLC set up that is taxed as an S corporation, your head's in the sand. Okay. The reason that is this example right here. This example is someone who makes $100,000 profit. Okay. All they have is an LLC. Uncle Dan or whatever used to be an attorney or an accountant, and he set up an LLC for you. They didn't take the next step and elect for that LLC to be taxed as an S corporation. Okay. An S corporation simply is an LLC that has made an election with the IRS to be taxed as an S corp. That is like critical to everything else we're going to talk about today. Okay.
So if you don't have that piece set up or that doesn't make sense to you, ask the questions and make sure that you are. That's if you're making over $40,000 profit in your business. And the reason that's so important is the way that the government taxes these two different types of entities. Okay? I should probably have a third slide on here that is, well, I'll kind of show it this way. This could be an individual that just doesn't have anything set up. Like their 1099 comes to their personal name, or they have an LLC. The tax situation is exactly the same for that type of person, okay? So say you've got an LLC or you don't have anything set up. You make $100,000 profit. Well, the way that IRS views this is there's only one way to take money out of this business. And you have to take every dollar out of that business subject to self-employment tax or payroll taxes, oftentimes people say. Those taxes are Medicare, Social Security, federal unemployment, state unemployment. All of those taxes make up this 15.3%. Okay? So if you're not taxed as an S corporation, all of your income, unless it's passive rental income, which we'll get into later, is subject to 15.3% self-employment tax. We're not even talking income tax yet. We went through income tax brackets, right? This is on top of income tax, 15.3%. Okay. This particular individual is paying $15,300 just in self-employment tax. Okay. Now flip the script a little bit. Say you set up an LLC, have it be taxed as an S corporation, and you make that same $100,000. Okay. What the IRS allows you is they allow you to pay yourself a reasonable owner's salary out of your S corporation. You're the owner of your S corporation, but you're also the CEO employee of your S corporation. So you're both, okay? As the employee, you can decide to take a $30,000 W-2 wage. That $30,000 is going to be subject to that same 15.3% tax. It's payroll taxes, okay? What do you do with the other 70,000? You run it as a distribution. You take it from your right business pocket, you put it in your left personal pocket. Subject to 0% self-employment. This is a very real situation and scenario between these two. These could be the exact same person, same business, same everything, same income. And these are true tax savings by someone that was smart enough to take their LLC to be taxed as an S corporation and set up payroll for it. Okay. So this is like the first tax planning 101 is your corporate structure. Making sure that if you're over that $40,000 of profit mark, you want to be taxed as an S corporation. And this is why, because $10,710 in tax savings. Now, that's probably not going to change your life, but I'm not here to teach you ways to give Uncle Sam a tip. I'd rather keep that in your pocket and send it to the government, right? So LLC versus S corporation is kind of the first piece of that, okay? Okay, these next pieces. Can anyone tell me, actually, any golfers here? Does anyone know what this is a picture of? Very good. Does anyone know the hole?
9,
Number 9.
7,
8.
1 to 8.
I
thought that was a pretty hard dollar.
Anytime I present, if someone tells me that hole, I give them $100. Any last takers?
3.
You're all wrong. It's number 12. It's Golden Bell, call it Almonds Corner.
7.
It's a par 3. So what should be one of the simplest holes at Augusta National. It's like unbelievably difficult. Okay. The reason I put this slide up here is because it's this golf tournament that created a change in the code, the Internal Revenue Code. Okay. The Augusta Rule. Who here has heard of the Augusta Rule? Okay, a few. Very good. Okay. So at Augusta National, Georgia, there wasn't enough housing for everyone that wanted to come follow the tour. And so they created an incentive for all the homeowners that live there near the course. Said, hey, listen, if you guys will just give up your homes, nice, beautiful homes. For the course of this tournament, we will give you a tax incentive. You will not have to pay income tax on the income that you generate from renting your home out during the PGA Tour. And so out of that dire situation for the PGA Tour, we came up with the Augusta rule. The IRS did, okay? And what the Augusta rule is they told all these residents, hey, if you guys rent your home for less than 14 days a year, and it is your home, you will not have to pick up any of that income, rental income, subject to income tax, okay? So how do we kind of take that loophole and twist it in our favor as real estate agents? Or as entrepreneurs, myself, exactly, very good. So this right here, my slides are probably the most boring slides you'll ever see in a tax presentation, but this is like how the transaction works. This is the most useful information.
Yeah, you're the only CPA I've ever seen use color, so don't.
So I'm just flowing.
Yeah,
Very good, very good.
Stimulated.
Calm down, Lisa.
You know, you guys have a bad rap. Okay, so the way that this works is you need to own your home, your personal residence, okay? You also need to have a business that you own, that runs, that's incorporated. Just, it can't be as like a sole proprietor. It can't just be, hey, I'm out mowing lawns or I'm selling real estate and I have nothing set up, okay? It needs to be a business. The way I advise my clients to do this is the business bank account sends, at least for me where I live, $1,200 a month to my personal bank account to hold board meetings in my home. So my business is paying me personally to have space to hold this type of meeting just in my home. And it's only the board members of my company that get to come to that meeting. Guess who my board members are?
You.
Your family.
Me and my wife. Now, do me and my wife talk about business? All the time. I have multiple businesses. I'm involved in a lot of things, and some of the things my wife heads up actually. So is there a reason to have a board meeting? Absolutely. Is she a legit board member? Absolutely. Even if she wasn't running businesses, she could be on my board, right? And so I have a legitimate board meeting in my home with my wife every single month. And when we do that, I send these funds from my business bank account to my personal bank account, and I write it off my business as the deduction of rent expense. Now, that's money that I would have taken out of my business anyway, but it would have been subject to tax, right? So this is a way that you can pull money out of your business, have it be a deduction, and not be taxable. Now, the way that this is technically supposed to work is you should have minutes to each meeting that you hold. Who was there? What was discussed? What happened? So that if you are audited, you have that record, okay? The second piece is there needs to be a consistent money trail of that rent expense. If at the end of the year, you're kind of like, ah, screw it, let's go spend $14,000 or whatever and call it rent expense. That might work for a year or two, but if you get audited, you're gonna get busted for that, okay? They wanna see a consistent transaction of, this is rent expense, just like you would pay anyone else rent, right? They don't, no one else, no other landlord lets you guys pay rent once at the end of the year, unless you prepay, right? So those are the big pieces. Now, how do I get to this amount? I went to the Marriott near my home and said, hey, I need a boardroom. It needs to be catered. I need all the amenities that my house provides for me. What's it gonna cost me to have that room or that location for the day to hold a board meeting for my company? Not uncommon for a Marriott to host that, right? And this is pretty much what they came up with. So based off of wherever you live, whatever you can get there's the amount that you should be doing on a monthly basis. Okay? Now, this is 100 times better than what a lot of people do, is they'll do a home office deduction. Where you measure the square footage of your office, compare that against the square footage of your house, and write off that percentage of your utilities and repairs and whatever. That gives you like $1,800 a year of deduction, right? Screw that, forget about it. Implement the Augusta rule. Way better, way better. Okay?
Hey, can I ask you a quick question? Did you keep the, when you did the hotel, when you found that as a quote, did you keep that in your documentation? So,
Absolutely.
okay, yeah.
Yeah.
Just as proof of.
Justify, if I ever, I've never been audited,
Yeah.
but if I do get audited, I'm ready to go to battle.
Yes.
And I'll probably still have things. Yeah, if you get audited, they are there to collect money. And if you think they're not, and you try to like win every little last dime, probably not the best strategy. Offer something up. Hey, yeah, I should have increased my W-2 wage here. I'll increase it to 40. Pay you the $6,000, but much better than them crawling through everything. Okay. This here is a picture of my family. On to our next tax strategy here. It's my wife. I've got 5 kids. None of them live in my home without working. No free rent in the Olson residence. Okay. Now that might make me sound like, oh yeah, that's a cool dad. You know, you get crap together. It's actually just a tax strategy. Okay. What is the tax strategy that I might be talking about that has to do with all my children living in my home?
Tax-free.
What's that?
You don't have to pay taxes on the money you pay them.
Very good, very good. So each one of these kids does something for my business. We don't do chores in our house. We work for the business. And that's because if you go pay chores, you're paying after tax dollars to your children, right? I put my children on payroll and they work for the company. They don't do chores in the home. Now they still have to haul hay and feed the horses and do all that. But they have to be at the office vacuuming, taking out the trash, clean my car. Right now, every single one of them is doing marketing for my company, right? There's my brand. Rusty Edwards is covering it, but yes, there's my brand. These beautiful kids, oh, that is such a cool accountant, you know, what a beautiful family. They're working for me right now, right? They're part of my marketing strategy, okay? They need to be compensated, right? They don't work for free. So the way that this actually works is, once again, my colorful slides, at least I'm using colors. And this is a little bit more complex transaction. We got the time, I'll go through it. Okay. If you want to pay your children to work in your business, first thing that you actually do is you go set up a separate LLC. This is a family-owned LLC. Your kids don't work for your S corporation. Okay. You go set up a separate LLC that you own 100% of. And do not make an S election, meaning you don't want that entity, that LLC, to be taxed as an S corporation. Else it screws up this entire strategy. Okay. So I went and formed a separate family-owned LLC that's not taxed as an S corp. Me and my wife own that LLC together, 50-50. This LLC provides management services to my main business, my S corporation. Okay. The employees of this family-owned LLC are my 5 children. Okay. And this company, like I said, provides services to this company that this company needs to pay for. Okay, for those services. And so main business bank account sends a $73,000 management fee to this family-owned LLC every year. Yeah.
Does it matter how old the kids are?
Very good question. This strategy works when your children are 17 years or younger. If they're older than 17, they belong here as a normal employee.
Okay.
Very good question. Very good question. All right, so. All of a sudden, I've created a $73,000 deduction in my main business. But now the family-owned LLC has $73,000 of income. Got a problem, okay? The way we eliminate that income at the family-owned LLC is each of these kids gets paid $14,600 on an annual basis. I got $73,000 of income and $73,000 of wage expense to my children. And that's just like a 1099. These aren't W-2 employees. You can pay them like a 1099. You wouldn't even issue a 1099. You don't have to, okay? Now, do I really let my kids go run off with $14,600 every year? Heavens. Heavens, no, not a chance, right? But they each have a bank account that has their name on it, has my name on it. I can control that. I can go fund Roth IRAs for those children. I can go pay for their sports, their travel, the family vacation. My kids cost more than $14,600 each a year. Diapers, right? So everything that I pay for my children, that's very personal. Like none of that is business expenses. You couldn't write that off. But I do, because they're actually employees of this company, and then I use these funds to fund their life, right? Pay for their sports. Anyone got kids that play travel baseball? It's crazy, absolutely insane, right? I take out a second mortgage, like your kids play sports nowadays. Okay, so the limit, this amount is very strategic for 2024. 14,600 is the standard deduction, okay? So the reason that's important is because they make equal to or less than the standard deduction, none of these kids have to file a tax return. And none of them have to pay tax on any of that income. And I just shifted $73,000 away from my business. With 0% tax. Right?
So it pays to have,
What's that?
so it pays to have kids. I'm just kidding.
Okay, listen, here's a true hack. I don't care what your beliefs are. The Internal Revenue Code incentivizes these people. Entrepreneurs, people that buy real estate, and people that make babies. Those three things. I don't care what your opinion is, the code is written for entrepreneurs, real estate investors, or people that have kids. So take that to the bank. All right, so this right here saved me $23,000 in tax itself by implementing for my account. Now, not all of you have 5 kids, some of them are older than 17. This is my particular tax situation, but in some variation, you can even do this with grandkids, it's a little bit more complicated. But some variation, this could apply to you if you have children and you employ them in your business. Okay?
Is there a downside? Is there any
0.
reason? If you have-
Okay, so the downsides,
Okay.
truly, the downsides are you've got to go set up a new LLC. That can cost money, right? You got to go set up bank accounts for all these kids. That can get administratively burdensome, if you will. But if you're willing to pay for the LLC to get set up bank accounts for all the kids and actually have the kids work. Now, this is not just like they don't do anything. My kids truly do have like responsibilities within the company, right? Those are the cons. As far as like, is that an aggressive tax strategy? No, it's legal. It's perfectly legal, right? Now, if my little guy, my 3-year-old, wasn't on like my social media, wasn't on marketing, stuff like that, paying him $14,600 might be a little aggressive. Like, truly, did he make that much? But baby models, that's like completely reasonable, right? So if I didn't have some social media aspect of my business, that might be a little aggressive. Like, I could see a CPA being like, oh, let's pay him $2,000 right now. Let's pay him $14,600, right? So you got to consider some of those pieces. They should be compensated reasonably, right? So those are some of the things to maybe look out for. When someone reaches out, there's an administrative side on the CPA side. They're like, yeah, we wanna do this, okay, we gotta go implement all this, you know, set up the LLC, get the bank accounts, run the payroll and all that. But no, there's really not a downside to that. Yep.
So no W-2s or 1099s. So just, is it the transactions out of the family-owned bank account that qualifies, that is your paper trail essentially? for
Correct.
Those transactions.
Yep.
Those expenses.
Mhm.
Okay.
Exactly. This bank account right here shows $73,000 of income because of that management fee that got sent over. And then you need to send those funds out of this bank account into all the children's bank accounts.
Do you do that in a staggered way or?
Yeah, so we do it on a monthly basis, right? You work, get paid monthly. If the IRS saw this whole thing in like one transaction, maybe it might be like,
What's going on here?
really, right? How realistic is that? Just like the Augusta rule, pay rent every month, pay your employees every month. If you guys got paid once at the end of the year, you probably would, right? Any other questions about this?
How well do you track what like jobs your kids do?
Oh, that is-
Just like anything else, like, there's a job description when I'm hiring someone, like, hey, this is what we want you to do. And then with each kid, I break out like, hey, here's your responsibilities. So you do need to have a job description. They need to do it. Some people go as far as like having them clock in, clock out. I don't. Just make sure that I don't clock in, clock out anywhere, none of my, you know. Good here?
You don't have to keep track of any kind of hours they work.
Some people do, to justify the wage, right? If you're paying them, if you decide, hey, I'm gonna pay you based off of an hourly rate, then yeah, I probably would track the hours. Yeah. I don't. I know my preference. I prefer to track the least amount of things.
Yep.
Like, absolutely necessary. Kind of like your guys' accounting. Okay, here we go. Okay, next piece here. We'll talk about this, if there are questions you have. I think most people know this strategy, bonus depreciation for equipment. You go buy an $82,000 truck or any vehicle for business use that's over 6,000 pounds. You can apply bonus depreciation to that asset, meaning you're accelerating the amount of depreciation and expense that you're gonna take in year one. So this particular situation in 2024, bonus depreciation is 60%. And so I would take my purchase price times 60%, and that would be my year one depreciation. So I could go, and this is kind of cool about this. This $82,000 could be 100% debt. You could have worked the whole year, maybe it's your first year in real estate. I made $49,000 this year. And you went and financed a vehicle for $82,000. You could wipe out 100% of your income. Year one, pay zero tax by financing this vehicle. Kind of cool, right? People use that a lot. Now, there's kind of a catch-22. If you go sell that vehicle and it's fully depreciated for the same price that you bought it for, you have to pick up income for the amount of that sales price. Because your tax basis, I don't want to get in the weeds too much, but you took a tax deduction for $82,000. When you go sell it for $82,000, it's as if your basis is zero. You paid $0 for it. You got the full tax deduction. You got to pick up what's called depreciation recapture income
So how long do you have to keep it?
up to $82,000. What's that?
How long do you have to keep it for then?
Doesn't matter. You could sell it at year 24 and you still have depreciation.
How much of that 82 can you sell that vehicle for and not pay tax? Not have that recapture.
Depends on how much depreciation you can.
But say year
If
two,
you
like,
sold it for the amount, say
say bought one next year. Bought another $82,000 car next year. How much can I sell this one for? Not pay.
to not pay any tax on the old one that you sold.
Yeah.
Yeah. You'd have to sell it for the amount that you haven't depreciated yet.
So 82 minus 49.
Exactly.
Can you sell it to yourself or like?
Is that a serious inquiry?
$40,000 truck.
Yeah.
My company sold it to my wife for 15.
No, I wouldn't do that. The IRS sees a lot of those, what they call collapsible transactions. So the economic substance of the transaction is, I'm trying to screw the IRS.
So I sell it to my brother-in-law who has a different name. for
Sure.
a good price,
No
and he
problem.
in turn sells it back to me
What's he gonna sell back to you for though?
$500 more than he bought it.
Sure. If you sold it to a third party,
Yeah.
then yeah.
So I'm gonna set up a third-party company. Mark it up to $1,500, sell it back to.
Yeah, I have my doubts that you'll actually do that, but I feel you, man. I feel you.
No. I think I got some. Ready to go.
Give you my client list.
There you go.
Okay, all right, so that's year one depreciation times the tax bracket. Saves you $15,000 by applying bonus depreciation. Now, bonus depreciation is phasing out. Trump takes office on the 20th. A lot of people think that he's gonna re-up this back to 100%. He's very, from tax perspective, very friendly towards small business owners. Hopefully that happens. It'd be great if it did.
I got another, more of a, your business strategy. Do you, with your clients, do you send out this type of information? Or reach out to them like, cause I didn't know about the 100% in 2020, or I would have gone and purchased 17 vehicles.
So.
I guess how do you?
Back to my
relate
very
this?
first slide, did you have
Yeah.
two conversations, one in the middle and one at the end of the year with your CPA?
One at the end,
One.
yeah.
I guess, I mean, every firm's a little bit different, but I have a laundry list of stuff that I bang with every client, at least twice a year. Do you know these rules? Because you might be thinking of something, and I'm not aware that you're thinking of it, but if you know the tax code, you're like, oh, heck yeah, totally.
So
Right?
the honest really kind of falls to the client to get with you, and then you kind of get.
We are proactive about certain types of clients, depending on what services we're offering to them, what they're paying, like the retainer clients, I'm like bugging them, right? It's fairly obnoxious. For someone that's like, hey, just do my tax return, I wanna hear from you. They could follow me on Instagram, and get 100% of all this. That's all I talk about. Well, I post some personal stuff, I'm open about my faith on my Instagram, stuff like that, but the majority of my social media is tax strategies. Right, so.
Got a question.
Yeah.
So what is £6,000? Is that a regular pickup?
A pickup, yeah, bigger SUV, some Porsches. It needs to be used for business. But yeah, wherever you go, when you guys as entrepreneurs, 1099 contractors, whenever you go buy a vehicle, you should totally be asking, what is this weigh? And what does tax code say about the weight of my purchase? Because that could swing pretty significantly your tax liability that you're in.
So what do people do at the end of, like, when you go to buy another one?
They sell this, they have depreciation capture, right? But when they go buy the other vehicle, they apply full bonus depreciation again. And that new vehicle was probably more expensive than your last one. And so you net more depreciation. That's why I say this is a double-edged sword. It's not just like, wham, go buy a vehicle every 2 years, right? Because you have depreciation recaptured. Now, one thing you could do, and what I did, so I was in door-to-door sales for about 5 years. And I drove a beat down Honda Accord all over the nation. Drove a ton. There's two ways that you can take a deduction for a vehicle. You can either depreciate it, like we've been talking about the whole time, or you can take what's called the mileage deduction. And you're just gonna get 60 cents, 67, well, at least for 2024, 67 cents for every mile that you drive. So if I got a piece of crap Honda Accord that I picked up for $8,000, am I gonna try to get an $8,000 depreciation deduction when I know I'm gonna drive that thing all over the country? I'm gonna get like $16,000 a year taking the mileage deduction. Once depreciation's up, it's up. It doesn't keep going. Mileage, long as that thing's running, right? I could have bought that thing for $8,000. And at the end of its life, I took $62,000 of tax deductions, right? So expensive vehicle that you don't drive very often, you're probably looking at depreciation. Beater car that you're driving all over the nation, really inexpensive, mileage deduction. But once you choose one of those methods for that specific vehicle, you gotta stick with it. You gotta stick with it. Can't be flip-flopping there. Now, I can go buy, my wife works in my business, so I'd appreciate her vehicles. She could go have some super nice vehicle and I could have a beater and I could depreciate hers and take mileage deduction on mine. Right? That's the both world. Very good. Okay, and the actual, so when you depreciate a vehicle, you also get to write off your gas, fees, insurance, lease payments, repairs, oils, tires, all those things as well. So it's not just depreciation, okay? So you need to track all those other pieces of running that vehicle.
Does it need to be owned in your business?
No. Okay. You can have a vehicle in your personal name, flows at the title, it's your personal name. Contribute that asset to your business, still in your personal name, and take a business deduction for it. Good question. Get that a lot.
Lease payments, is it only lease then, or is it?
Yeah, that is one caveat. So if you are leasing a vehicle, your deduction is not depreciation, it's just lease payment. Period.
But if you're,
You purchase the vehicle and finance it, then you've got depreciation and all these other pieces. I should really have, this probably shouldn't be there,
okay.
or different. Hey, remember colors and CPAs, like, you're kind of stretching it a little bit. But yeah, good point. Yep. Okay, any other questions about vehicles? Sweet, because that's all I know about them. Hey. Real estate, we'll go through kind of some of these bigger pieces. So why is real estate so valuable? You guys know this, I'm preaching to the choir, you can probably teach this better than I could. But it's also good, I've noticed with a lot of, we do a ton of work with like Keller Williams offices down in Utah County, right? When you can educate your client about some of the tax benefits of some of the transactions that they're getting ready to make, you are the authority, right? There's an additional added measure of trust as their advisor. And so some of these pieces are probably pretty good for you guys to understand. So you could walk through a high level. Well, you would or wouldn't do this because of the tax benefits, and this is why. And if you can talk high level on those points, to me, you're a lot more valuable to your client, right? But let's go through like a rental property. A lot of you guys have rentals. I see you throw them all up here. Basic scenario. Okay, say I go purchase a rental property for $1 million. There's a piece of that rental property that's allocated to land that's non-depreciable. So right off the top, $200,000 is non-depreciable. From a tax perspective, I'm going to take that home, that rental property. You'll have a land allocation that's non-depreciable. And then we'll say $800,000 is the actual home itself, okay, that we're going to depreciate. Residential rental properties depreciate over 27.5 years. So I'm going to take that $800,000 over 27.5 years. It gives me a depreciation expense of $29,000 every single year. Now, this is the beauty of real estate. Here's a fairly real scenario. I've got rental income of $42,000 inside of this rental property, right? I've got a property tax expense, $49.80, HOA, repairs, mortgage interest, and then bam, I have a massive amount of depreciation expense. So all of a sudden on my personal tax return, I'm running a business that's losing according to the IRS, right? But from a cash flow perspective, I'm just stuffing my pockets, right? Now, people don't get rich off rental real estate. You get wealth. It's a long-term game, right? If you're, you know, maybe some Airbnbs. But from a tax perspective, you've got a loss. The IRS says, oh, you lost $7,200 for you. We're going to reduce your tax liability. Sweet. Well, I'm just sitting here with all the cash in my pockets, right? Great situation. Now, what's even more, so we don't pay tax on any of that income, but we've got it in our pocket. right? We get the depreciation expense. And here's kind of the beauty, the eighth wonder of the world with real estate. Okay, we're taking a depreciation expense for tax purposes. What's actually happening with this real estate? It's likely appreciating. And so you're like triple dipping from a tax perspective when you invest in real estate. Because you get a tax loss and the asset is actually appreciating in value. And what's even better is you're leveraging OPM, other people's money. Not even your money that you're doing. It's a mortgage and rental, right? That is how America has gotten wealthy. It's through real estate.
Does this only work if you're a real estate agent? My tax lady says that if you're not a real estate agent, cannot do this. Like if you're a W-2, like my dentist.
Well, I think the argument would be you should have an LLC to take in that rental income and then your LLC would depreciate it, correct? Because your LLC would own the property and that's
So
where the tax.
You're asking, you guys are talking about two different things. I'll
Right.
cover them both. You're talking about real estate professional status.
Mhm.
It's a filing status with the IRS. Yep. And I'll go into that. Depending on your income level, you can absolutely do this. And I'll go into that as well. Okay. So you guys are aware of cost segregations. We'll kind of go into real estate professional status that we'll talk about. Cost segregations, if you guys don't know, you should read about that before the end of the day. It's where you perform a study on a property and you go separately identify all the different assets that are inside that property and you can depreciate those faster, meaning it increases the amount of your depreciation expense. I've got the tippity top real estate guys in Utah that don't pay tax. Straight up don't pay tax because of cost segregation. They'll buy enough real estate every single year, perform cost segregation studies and eliminate 7 figures. It's perfectly legal for real estate professionals, which all of you are, but I will jump into that. Okay. The other piece of this that you guys should be able to talk high level, I think, with your clients are 1031 exchanges, where you go sell a property, and if you roll that property into another property, you can defer the gain. You don't have to pay tax on that. And that is ultimately, I mean, the idea with real estate is buy, sell with a 1031 exchange, and keep doing that over and over and over again, and then die.
Not die, because we all have to
That
die.
is the best tax strategy in America. The reason is you perform those 1031s, you just keep rolling more gain into the next property, the next property, the next property. When you die, your heirs get what's called a step up in basis. Meaning your little brat kid, it's not gonna have to work, gets all of this real estate and never pays the tax on any of that real estate. They receive it as if they paid fair market value the day daddy died, which is awesome. And dad is a genius because he just eliminated millions of dollars of tax. And that's done all the time. And
Up to 12.
what's that?
How much couldn't someone inherit that way?
Yeah, you have the lifetime exclusion. That, I think that's gonna change in January as well. $12 million. Yeah. Hey, let me jump into your other question here. Okay, here it is. Real property trader business. Why would a taxpayer want to qualify as a real estate professional? Okay, you guys are different than dentists. That is true. Okay, this is why you're different than dentists. In the code, there's passive activity loss rules right here. What it says is rental income is not treated the same as 1099 commissions or W-2. One's passive, one's ordinary. They cannot mix. Passive losses cannot offset ordinary income and will only let them offset if they make a certain amount of money, okay? So these loss limitations are, if you make $150,000, you can offset, sorry, $100,000. If you make $100,000 or less, you can offset $25,000 of rental losses against your W-2 job or whatever. your 1099 job, your S corp, whatever it is. For every dollar that you earn above 100 grand, this gets limited up to 150,000. So if you're at $150,000 of earnings, you don't get any passive losses that can offset your ordinary income. Unless you are a real estate professional. Now, this is where it sucks for me. I am not a real estate professional. I've gone through these rules 100 times trying to bend them to make me a real estate professional. I'm not. I'm a finance professional, right? For you guys, this is huge, huge for your personal tax situation. So for someone like myself, I make over 150. I can't use any passive losses to offset my accounting income, franchises that I'm involved in, any of that, right? But you can qualify as a real estate professional under this coach section, and it provides an exemption that allows qualifying taxpayers, real estate professionals, to take your passive losses, from a cost segregation, and offset that with your 1099 Keller Williams income. They get married and eliminate each other. Okay, so some of the details with that we'll run through is this is how you qualify as a real estate professional. First, we'll go through this. Number one, identify which real property trade or business activity you are materially participating in. There's 7 types of inclusionary activities that you can do that qualify you as a real estate professional. For you guys, which one would that be? Very good. Real estate agents qualify under that acquisition. Okay, there's some other pieces. Brokerage trade that maybe you guys could qualify under, right? If you own your own rental properties, potentially that as well. So these are the 7 activities that if you materially participate in any of these 7 activities, you qualify. That's one step to qualifying as a real estate professional. So those are the 7 activities. Back to my other slide now, okay? We've identified which of the 7 activities, okay? Now we have to figure out, do we materially participate in any of those activities? I got a lot of rental properties, but I can't qualify as materially participating in those activities because of this. Number one, you have to spend more than half of your personal service hours in real property trades or business in which you materially participate in, okay? I cannot justify that I spend more than half my time on my rental. Wouldn't be justifiable, okay? Number 2, the 750-hour test. You spend more than 750 hours during the tax year in real property trades or business in which you materially participate. You got to be both these, okay? Typically, if you're spending 750 hours, there's nothing else that's taking more than half your time. They kind of go in tandem, right? For you guys, yes, so far. Accurately track and calculate your total hours that you spend on real property trade or business. How much time do you spend doing real estate? Sweet, keep track of it. Last, if you're using rental properties to qualify, you can make a group request. But you guys are in acquisition, leasing, all these other activities that would qualify you as real estate professionals, okay? That's why I hate you. We went through that slide. I got like 2 more slides and I'll shut up. Okay, material participation, what that actually means. That's defined by the taxpayer must materially participate in the activities. Material participation involves regular, continuous, and substantial involvement in the activities of the business, okay? Are you guys materially participating in your own labors to sell real estate? Yes, absolutely, right? Okay, I'm not gonna read the rest of that because I'm out of breath. But you get the point. That's how you qualify as a real estate professional. You guys all likely qualify unless you're doing this like very part-time and you have another main W2 job. The cool thing is, if I really wanted to go to the extreme, I could have my wife, I file a tax return married, filing jointly. I can have my wife qualify as a real estate professional. generate a bunch of losses for her that would offset my income. Cool. Like I said, the tax code incentivizes people to take babies, make them with your spouse.
Make them.
Okay, the last example that I'll show here is a non-real estate professional compared to a real estate professional. And the impact that this can actually make. So say you've got a W-2 job, $175,000 a year, you've got a side business or whatever, S corp income of 25, total income $200,000 for both of these. Non-real estate professional, real estate professional. You've got rental properties, and maybe you've done a cost segregation study, and you've generated a $75,000 passive rental loss. For this guy over here, when he's preparing his tax return, here's my total income. What are my losses? $75,000 loss. Oh, dang it. I can't take that loss because of passive loss limitation rules. I make over $150,000 a year. I can't take any of that. Forget about it. It just gets carried forward to the next year. Oh, looks like I've got $200,000 of income. The tax rate that I showed at the beginning of the slides is 24%. I'm paying $48,000 in tax. Now, I get there's child tax credits and all these other things, okay? But for this example, the tax savings is accurate to the T, okay? This scenario, I got 200 grand of income. I'm a real estate professional, so what does that mean? It unlocks my passive rental losses. So when I go prepare my tax return, 200 grand of income, all $75,000 of losses, I've got $125,000. Not only do I have less taxable income, well, what else changed? Tax rate. I mean, down. You got less taxable income. Tax rates, tax tables work like a set of stairs in the US. Each amount of income is taxed at that level, okay? So now I've dropped down a tax rate. I've got less taxable income. So I'm paying a lot less tax, $27,800 compared to $40,000. I just saved $20,500. I do that all the time for real estate professionals. That's why I'm jealous of them. It's a very real thing for you guys that if you're not doing, or maybe you're not at that level where, hey, I need to be doing this, but know that that is a huge tool. And it's now securely in your back pocket. You're not using it. With that, I think that's everything that I have for you guys. So Q&A, yeah, let's do some questions.
I don't know, it might be a stupid question, but you hear people talking about like setting up businesses in other states for tax purposes. You didn't really talk about that. Some people also say that that's a crime because you're trying to get out of paying. Like Utah might say, you haven't left Utah. How can you say your business in Wyoming or Delaware?
Yeah.
What do you?
So most of the times it's okay. So Montana, if you ever hear someone talk about Montana, the reason they do that is they don't want to pay sales tax on a vehicle, a very high priced vehicle. So they'll go set up a Montana LLC, buy the vehicle with that Montana LLC, not pay any sales tax, bring it back to Utah, use it, it's registered. That's legal. You can do that. You avoid it paying $9,000, $15,000 of sales tax. Right? As far as your operating entity selling real estate, makes 0 sense to go set up a Montana LLC and operate that. You don't even deal with it. What you hear about Delaware is just the transparency. Someone can look up to see who owns your business here in Utah. Delaware has more tight rules around basically the transparency. So if you didn't want anyone to know that you owned that business, you could go set up a Delaware C Corp. No one's gonna know that you own it, and you can operate that way. I don't really care if people know that they own businesses. So if you got something to hide, go to Delaware.
All right. Well, thanks. So as a new agent, you would set up like you were saying. Oh, no, you have to be an LLC first, then you have.
Correct. An S Corp is an LLC that has filed Form 2553 with the IRS to convert it to be taxed as an S Corp. There's no such thing as an actual S Corp. It's just an LLC that has made an election to be. Good question. If anything, I want more Instagram followers, so if you don't mind giving me a following, that'd be cool. Any other questions that I can answer for you guys?
I want to get my dentist to buy real estate.
You gotta get his wife
That's nice.
to become a real estate professional.
no.
And he can appreciate it all. And I'll tell you, it's definitely. Yeah, you can make a grouping election. You've got to hit those qualifications, right? I got clients. That's what-
How tracked are those numbers? Cause I suggested that.
Very, very well tracked. to get audited.
Every time you get.
If you don't get audited, no one tracks.
I suppose the argument could be made, you're in office, you clock into an office a certain amount of time every week. That's probably your.
Yeah, if you guys were, I can shoot something out maybe to Bradley. There's 4 podcasts that are like totally legit, do a way better job of teaching real estate professional status. That if you're really interested, you should listen to, but it goes into, all right, what are all the things inside of being a real estate agent? What are the activities that would qualify as inclusionary events that, you know, for my rental property, like for example, bookkeeping for your rental property doesn't count towards that 750 hours. Right? You would think it would. If you sit in bed and scroll 3 hours on realtor.com every night, that doesn't count towards your 700 hours. So you've got to know what counts, what doesn't. But yeah, it's on your honor. I mean, everything with like, besides W-2, a 1099 and brokerage statements, most everything that you guys report for your tax return is. I don't get a 1099 from any of my clients. Just tell the IRS. Any other fraudulent, like. Screw the IRS, any questions?
So I have an attorney that wants to buy more real estate. No, so is there any way that somebody gets a W-2, like, besides having a wife? To
Okay,
do this?
here's another strategy that I didn't go over. Here's your short-term rental loophole. That if you have an Airbnb, so it's a short-term rental, meaning no one's staying in it for long, they're not booking for more than 7 days at a time.
Mhm.
You can go do cost segregations on a short-term rental property. And they can, those are all active, not passive losses, because it's an active business, short-term rental. The IRS sees that as different, so that's another piece. You go buy a bunch of Airbnbs. As long as someone's not staying more than 7 days at a time. And you have, the participation is active participation, meaning you just manage it, you're booking it, whatever, maybe go clean afterwards. If you have active participation in those, then you can do a cost segregation study, create a huge loss because of the depreciation. And that depreciation loss, that $75,000 will offset his dental debt too.
Okay.
And a lot of people doing that too. Yeah. So I mean, Google that or YouTube it, short-term rental loophole. Hopefully you find it.
Hopefully you find that.
Anything else? Sweet.
I think you just got a whole bunch of clients. Just like-
I followed you on
Hello.
Instagram.
Yeah. Appreciate that. Okay, that's it. Thank you. Wrap it up. Can we do this right now or?
With your hand.
Thanks for having me. Appreciate it.
Then we have Jessica, who's provided one for us.
Yeah.
How's it going, guys? Good, I'm glad. I am freezing. I'm glad that we're finally in winter though, because I swear that we just skipped it for a long time. Hi, I love seeing the fact that I know most of you guys. For those that don't know me, I'm Jess, I'm a Silverback from Warranty. Hi. Couple of big changes that I want to make sure that we go over is now that we are in 2025, there are a couple of changes that happened with Silverback. The first one is we do have price changes. We still have the 3 plans, but we have a $450, a $600, and we're introducing a new $700 King Kong plan. It still includes the sprinkler coverage. It does still also include
a free service call fee. Most people use that for the free rekey. And then one of the biggest changes that we have made is we've actually extended our limits on a lot of our different items. Most notably, we've a little bit over doubled our limit for HVAC, just because everything has gotten so much more expensive since like 2022, I want to say. We've held off as long as we could, but even within that, as things get more expensive, we just noticed that there were a couple of times where our coverage was falling a little bit short. And so we wanted to really double down on it and make sure that we were really taking care of our clients. So we have adjusted that. And so from January moving forward, and even if you guys have any closings that are coming up this month, just let me know, because I can put them on the new plan with whatever is currently on your guys' list. So if you guys do have 600 written down onto it, let me know so that I can adjust it and put them on that new plan. And then starting, it did start this month, but for any current contracts, we will make that exception, and starting February 1, it's just gonna be that new pricing. So does anybody have any questions? Thoughts, comments? No, then I know that you guys already got a ton of information, so I'm gonna let you go eat food. There's Panda Express, so go dig in. I'm hoping not to take anything home.
I think when I read it, I'll go for it. But there's always. Based on what it has before, yeah, but I feel like it's probably. Actually. So you could have 7. Well, you guys have. That would probably do it. Okay. And yeah.
I can leave it.